You was lied to about change of character. Change of character did not become developed in 2020 by this Mr. Twitter man and two other traders. Let me tell you what actually happened. So let me actually educate you guys on change of character so that you're not getting manipulated out of the market and you're getting the best possible entries. Because when we take a look at it, Richard Wyckoff was actually born on the 2nd of November 1873. And this is important to know because Richard Wyckoff was the actual guy who coined and invented the concept change of character. This phrase change of character, like we said, has come around for almost 200 years and it was completely taught wrong. This is why so many of you are seeing this change of character and it just never seems to work. Or yeah, maybe it works a few times in hindsight, but you're not quite getting that consistency that you want. You see, and the reason why, when you're applying change of character, the reason why you're still lacking that consistency you desire is because it fails to include all of the vital details to validate whether a Wyckoff schematic is actually happening. Because when you're seeing a change of character, we're taught it completely wrong. Now, let's go to the drawing board. So if we go to the drawing board and see how it's taught, right, we will see that, okay, for example, we'll see a downtrend, lower highs, lower lows. And then what will happen is price will then create a BOS to the downside, sweep the low, and then we'll see our change of character where it breaks to the upside. And then at London Open, we take a buy to do that. But how many times have you done that? And then we see the market do, and then bang. Then eventually later on in the day, your alert goes off and you see the real move occur. It's because we were taught change of character completely wrong. Look, I've got no bad blood against these people who've tried to come up with this strategy. It's just that I want you guys to truly understand the real change of character so that you can stop getting manipulated out of the markets and find yourself in far more winning trades. So what we can see on screen here is Wyckoff's teachings. Now, Mr. Richard Wyckoff studied what we call accumulations and distributions. And essentially what an accumulation and distribution is a specific piece of price action with a series of events and phases. And this specific price action, and we'll get into the exact details of the change of character in a second, but we have to understand the bigger picture first. When we have one of these schematics, these accumulations of price, we are seeing bigger players fulfill their orders over time. Because remember, an institution can't come in and fill all of their orders at exactly one price point because there's not enough orders for them to fill. It's like if I said to you, go to the store and buy me 100 million apples. You couldn't buy 100 million apples because they don't stock it. You'd have to go to the next store and the next store and the next store until eventually you got it. And I've done a whole video about this before, but we need to see price spend time in these areas to accumulate so that they can fill their orders. And a change of character now specifically is a specific point that occurs twice inside of these accumulation or distribution, depending on if you want to look at a bullish or bearish example, to tell you two simple things. That when the market is going from a bearish environment to a consolidating environment, that's it. That is literally all the first change of character tells you. But again, what we're doing is we got taught this by some magical YouTubers or TikTokers or Twitter guys that we look up to, and they're saying, you know, no, wait for the BOS, wait for the CHOCH and take an entry. But if you physically look at the studies of one of the market titans, Richard Wyckoff, who was alongside WD Gang, Elliott Wave, and of course, look, you can study Richard Wyckoff because the man needs his flowers. But when you're going here to take an entry, you're timing the market completely wrong. Because you have to wait for the first change of character, which all it is essentially seeing that market change from, again, a trending environment to the downside to now a consolidating market. So and it will sometimes sweep these highs and sweep these lows so it looks like the CHOCH. But don't trade that. Wait for the market to consolidate. Because when you're seeing that first change of character, it just means you're in phase A of a Wyckoff schematic. Phase A means you're simply stopping the prior trend. Why is it stopping the prior trend? Because it is the first interaction where the sellers are reaching the demand zone. So they're starting to fill their first amount of buy orders. But remember, they can't fill all their buy orders at once because it takes time to fill their orders and they need to physically find the liquidity to do that. So you'll then see the market enter phase B. Phase B is where time is passing, opinions are forming, the market is going sideways. This is where you've taken your entry and now you're wondering, why isn't the market sharp yet? And then what will happen is you'll have phase B, where they're filling more orders. Again, phase B is just time passing, opinions forming, where you're seeing the bulk of that consolidation. This may be perhaps when you've taken your entry and you're wondering, why is the market not filled yet? Or you're wondering, why is it, going in a little bit of profit, back in drawdowns, just, chopping around and not doing much? Because in phase B, remember, time needs to pass so opinions can be formed, because it takes time for these bigger players to physically fill their orders, because they're trading so much liquidity and so much money. They're not coming with, 10 lots that can get instant executions. They're trading with hundreds of billions of dollars that takes time for those orders to be filled. And what you can also get in phase B is what we call a secondary test, where price comes in and sweeps out those lows and manipulates you out. This can also act as inducement and make some people start to sell the market to go lower. So maybe some people are now like, yes, I'm finally in profit. And then we get what we call our spring in phase C, which is our final shakeout. So all of those weak-handed buyers who, for example, are not in, maybe you see another change of character again and people are like, yeah, let's buy again. And then bang, they get slapped out again. Because remember, we're in a bigger phase, we're in a bigger accumulation. And the one thing that's true about all these financial markets is that the majority lose. And this Wyckoff is to study how the majority lose. And then from there, we'll finally see our second change of character, which is now when you're exiting from this consolidating environment, from this trading range, from this accumulation, and now seeing that final order being put in, which results in a sign of strength and price breaks out the trading range. So for me, what I've needed to do to find consistency with this is allow that entire schematic to form and wait for two change of characters. The first change of character in phase A, where the market enters a trading range, and a second change of character now when it exits that trading range. And once the trading range has occurred and the entire accumulation is manifested in that stop, pause, and go way, now I can look to take an entry off my manipulation for that mitigation to continue to send it higher. And let's look at some examples on the chart. Okay, cool. So you've gone to the market, right? You've seen your demand zone. Price has gone into it and you're like, okay, let me go to a lower time frame and get my CHOCH entry. You see price in its downtrend, lower low, lower high, lower low. You see that break. You see that change of character. And now you're like, yep, change of character, entry model confirmed. Maybe you identify an order block, right? And then you're going in to set your limit order, stop loss below the low, your target and your high, and now you're like, yep, no, I'm ready, got my change of character. And ultimately, what happens next? And there you go, you've literally got manipulated out of the market. So how I'm viewing this from a Wyckoff perspective now is this change of character is just initiating our trading range. It's just phase A, where the prior trend's being stopped, where we're seeing that seller's climax, that SC, to that AR, to then that secondary test, to now moving into our secondary test in phase B over here. So instead of me taking that unnecessary loss, I'm waiting for this entire schematic to validate itself and complete. Because now we're in phase B, we've had our secondary test in phase B. What we want to see now is a spring, and then a sign of strength, where price can exit this trading range. So we give it time, allow the schematic to actually manifest. Okay, and now we've got our sign of strength. Our schematic is completed. We've had all of our first change of character, which shows us from phase A, phase B, phase C, and then phase D has occurred and given us that sign of strength. So now once we've got that sign of strength and that second change of character has occurred, what do? We simply look for our last unmitigated area of price action. Now, for myself, that was this micro reaccumulation here. Now, don't worry, I've done other videos on these reaccumulations. If these are not clear to you, definitely check out them on the YouTube channel. Obviously, once we've marked out that last unmitigated area, and then from there, we simply wait for price to come back down, fill us in, and then the real move occurs. This was one trade that me and my team caught. We got some better entries on this as well. I mean, for myself, the actual trade that I caught was, yes, this one here. And I had another entry a little bit earlier in the day as well of this micro type 1 accumulation, which again, this is getting a little bit too advanced for this video. I will do more videos on this in the future. But within this larger schematic, we had another smaller accumulation. And for me, my entry came in here of this 80%. Now, if you guys like this and you want to learn more, I do have so many more videos on my channel about this. please don't forget to comment, like, and subscribe. So with this stuff here, go and backtest it yourself. Go to the market, look for when you see trading ranges, and then look at that change of character 1 to initiate the trading range, look at change of character 2 that exits the trading range after the consolidation, after the manipulation, as per those Wyckoff schematics on screen here, right? Here are all the different variations of them. Backtest it. Don't just take my word for it. See exactly how many times it plays out in the real market. And if you're looking for that extra edge to take your trading to the next level, I will be shortly opening up my mentorship program. You can go to the link in the description. You can apply for the program, or you can simply message me on my Instagram. What we'll do is we'll hop on a call, have a quick chat, just to see if I can even help you with your exact situation. But with that being said, guys, I appreciate every single one of you guys for tuning in. And as you know, I'll see you at the top, from the top, because that bottom is way too crowded.